at -6% in our trading account. That means that within 4 trades, I'll lose my trading challenge. What can I control? I can't control the market. The amount of trades that I need to lose the challenge goes from 4 to 8. What's up guys, welcome back to the KBFx channel. Today I'm going to talk about something that's a bit of an uncomfortable topic in trading, dealing with drawdown. So what is drawdown? Drawdown is being at a loss in your trading account. It's being in the red. So it means drawdown means that you've taken a couple losing trades and now that your trading account is in the red, or you've took a couple losses, aka you're in drawdown. So drawdown is something that every real professional trader has to deal with. Unfortunately, if you want to be in the winning trades, then you also need to be comfortable being in the losing trades, because if you're familiar with the backtesting process in the strategy that I am currently live trading, as per my backtesting data has shown me, is that not every trade I take is a winner. And through live trading, I've also experienced that the fact that not every trade I'm going to take is a winner. So being a trader means you have to be comfortable taking losses, and that is why we do something which is called risk management, which means we preemptively work out the risk of the trade before we take the trade, which means this is how much it's going to cost me of risk to put on this trade. Say I was using 1% of a 100k trading challenge, that would be 1k. So I would have to, in my mind, before I place that trade, say, am I comfortable losing 1,000 on this trade if it happens to be a full 1% loss? So that is called like preemptively planning your risk. Preemptively planning your risk is something that not many traders do, especially new traders. Preemptively planning your risk. How much am I risking on this trade? How much drawdown potential does this trade give me? That is a question we all need to ask ourselves before ever placing a trade, a live trade. And unfortunately, most traders don't do that. Most new traders don't come in and use a risk management strategy. Most new traders don't come in with a back-tested strategy that they know has a probabilistic edge in the market, unfortunately. And fair enough, because obviously most of us don't know to do that, and it takes a bit of laying the foundation, building the mindset of a consistently profitable trader. What I mean by building the mindset of becoming a consistently profitable trader is simply just developing a probabilistic mindset. But not just a probabilistic mindset, you also need to be able to unlearn what you've learned and relearn. And that's a skill within itself. To be able to unlearn and relearn is something that we all have to go through if you want to become a trader, because no one is born thinking probabilistically. It's something that you have to develop, and it takes time, because we naturally don't think probabilistically. Fair enough. So I want to get into the original topic. So dealing with drawdown. So drawdown sucks, but if you want to take a prop firm challenge, and if you want to put your own personal capital at risk in trading, it's something that you will unfortunately inevitably have to deal with, and that is drawdown. So I've just got my whiteboard here so we can do a bit of a discussion, and I want to also have a bit of honesty time and talk about how does it feel being at taking losing streaks, because last year in July we had a very well, I personally had a very good July last year on my personal accounts and funding accounts. However, unfortunately, since July I have been in a big losing streak, one of the biggest ones that I've ever taken, big losing streak, massive, has definitely taken a toll on my confidence in my trading, which is fair enough. And speaking to Ibby as well, we've been speaking about taking emotional losses, so taking unnecessary risks on my account that don't need to be taken, especially during these losing streak and drawdown periods. I have found myself more prone to taking more lower risk setups and more poor quality trades, which is something, you know, I'm human. It's something that I'm not a robot. I do trade, you know, as best as I can as a robot. I try and trade as robotically as possible, but the real side of trading is that I'm a human. I make errors, I make mistakes. You know, I don't always take 10 out of 10, 11 out of 10 A plus setups. I, especially during drawdown, I've been prone to take more low probability setups. So I just want to talk about dealing with drawdown. So let's talk, say for example, we have a £100,000 trading challenge, and we've just started this challenge, and we go in risking a full 1% per trade, and we happen to lose 6 consecutive full 1% losses in a row, which would put our £100,000 trading account at minus 6% profit. And usually with these trading challenges, we're given a maximum drawdown of 10% with a 2-step challenge. So I'll put max DD, DD being short for drawdown, 10%. I'll just correct that to minus 10%. Right, so far, in our hypothetical 100k trading challenge, we've just taken 6 full 1% losses, or this could have been 12 0.5% losses, which is more similar to my case, as I've taken quite a few losses. So in this, say we have a max drawdown of 10%, and we're currently sat at minus 6% in our trading account. If I maintain a risk of 1%, that means that within 4 trades, I'll lose my trading challenge. So if that is the case, that within 4 trades, I'll lose my trading challenge if I continue to risk a full 1%, what am I going to do with this? What can I control? I can't control the market paying me out. I can't control the market being more profitable. I can't control the fact that the account is in drawdown. But what I can do as a professional trader is I can manage my risk. So let's focus on what I can control and what I can manage, and that is my risk. So what I'm going to do is I'm going to change what I'm risking per trade from 1%, and think about it. If I now reduce that down to 0.5%, so now I'm risking 0.5% per trade. What does that mean for my max drawdown? Well, what that means is that now the amount of trades that I need to lose the challenge goes from 4 to 8. So what I've just done is I've effectively doubled my chances of keeping this challenge and getting it back into profit to a degree. So trades to lose challenge 8, and what I could do again is I could reduce that down to 0.25% risk per trade. So now my risk is 0.25% per trade. So what does that do to my amount of trades that I have until I lose the challenge? Well, it doubles it again. So now, instead of having only 4 trades until I lose my 100k trading challenge with whatever prop firm that I've deemed that I want to take the risk with, now I have 16 trades if I reduce my risk to 0.25% per trade. And what I do then is I give myself 16 trades until I lose that challenge. So now I have more of an opportunity to take trades, and I give myself more leeway in terms of getting that count back into profit, so that we can get a payout or pass a prop firm challenge, or, you know, if it's a personal account as well, we can just, you know, make some profit in trading. If we then start to get some profitable trades, as we get this profit down to say we get back to minus 3%, what I could do then is, once I'm in minus 3%, is I could increase my risk increase my risk back up to 0.5%. So now, when I do catch that next profitable trade, it doesn't have to, so say I make a 16% in the market. If I'm using a 0.5% risk, I would take away 8% on my trading account, right? So that is why reducing the risk, as much as it gives us more trades until we lose the challenge, it can also decrease our profit. So that is why when we start to increase our drawdown and get back towards either break even or profit, say we get to -3%, we can start to increase our risk again, because the amount of trades it takes to lose the challenge will also be in our favor. So we know that from 3% max drawdown, we've got 7 trades from 1%, or 14 trades until we lose the challenge with a 0.5%. So yeah, this is how we would go about taking that drawdown and eventually getting it back up to break even and eventually back into some nice profit. And then when we get it back up into some profit, depending on if we have trailing drawdown, we can use a higher risk size and make more profit per trade when the market does decide to go back in our favor. We could start risking a full 1%. I wouldn't really advise going much over a full 1%, because we still obviously have the max drawdown, and most of prop firm challenges have a max daily drawdown of around 5% as well. So yeah, this is how I would go about dealing with drawdown in the market. And then obviously then if we don't have trailing drawdown, if we don't have trailing drawdown on the prop firm challenge, we could then increase our risk size to 1%, and then we'd be looking at 13 trades to lose the challenge. And then what I would recommend also is adjusting your risk size per your profit and your drawdown. So always preemptively plan the risk of your trades. Never take a trade where you don't know how much you're risking. It is imperative that you know how much money you are putting on the line every time you click that buy or sell option. Because say you do take a full 1%, which is a high possibility that you will be dealing with full 1% losses in trading. It's part and parcel of the job, and also learning. You've also, if you're learning, you've got to be very willing to lose as you're beginning. And you're never going to not lose. It doesn't matter how much about the market you learn. You're always going to have to deal with losses. Unfortunately, like I say, it's just part and parcel of the job. So yeah, this is how mathematically I'm dealing with drawdowns. Put the probabilities back in my edge as a professional trader. There's also the psychological aspect of dealing with drawdown is another avenue that is very, you've got to deal, like I mentioned, confidence in the strategy swaying during these high drawdown periods. But it's important to note that last year in 2024, I had to deal with a very, very pretty similar scenario where the market didn't start picking up until like March, July. And, I had to be very patient for the trades that did come. And then Q3 and 4 were also drawdown periods. So, but I still ended that year in profit. So I have to look at the big picture. And I need to take myself out of I need money now. I want to instantly extract money from the market, because that leads to emotion-based decisions. And if you want money from the market, and if you want to extract and you feel the need to force it, it's really going to work against you in the market. You really need to just develop your plan, develop your edge, and just solely stick with that, and never really take emotional based decisions. I know it's easier said than done in trading. Don't take emotional based decisions, but you just have to deal with it. And yeah, that's the main aspects of what I want to cover today in terms of how I deal with drawdown. I mean, I could go on forever about the psychological aspects of dealing with drawdown. I know it will caused a lot of people to abandon ship, give up on trading because they've took drawdown, or they took a couple losing trades. My apologies as well if you can hear Fifi snoring, but you know she's a very loud snorer. I hope it isn't too bad, but yeah. So the psychological aspect of dealing with drawdown, it really sucks. I mean, I wish we didn't have to deal with it, but you do. You have to be able to accept losses in the trading game. You have to be able to deal with drawdown and not lose your cool. Again, easier said than done to not lose your cool and preemptively plan all your risk. But every time, like I say, you click that buy or sell option, you really need to kiss goodbye whatever you've risked. So if it does say take a full loss and it hits your stop loss, you've already thought in your head, all right, this is how much it could lose. I'm willing to lose that and let this edge play out. For example, say you had £1,000 account. On £1,000 account, I'm sure you could say, for example, kiss goodbye forever, like you would in. I don't want to compare trading to a fruity machine, a slot machine, or whatever, but like I've heard one of the Falcon team members mention, is like the trading really is just one hair away from gambling if you go into it with the wrong mindset and the wrong attitude. So you know, there are similarities between gambling and trading, of course. So when you go in the fruities and say, for example, you put in £5, in England, we've got these like slot machines in the pubs and they're called the fruities. You put £5 in, you essentially kiss goodbye that £5 when you put it in, because you, in your mind, have come to terms with there is a high possibility that this £5 is not going to come back to you. You're going to play the game, you're going to see some numbers and pretty colours, and then at the end of it, your five is more than likely going to be gone. So with trading, when you put a full risk on, you need to have a pretty similar mindset where it's like you kiss that money goodbye, and then when it makes profit, it's just that extra nice when it does not make profit. And in trading, you really need to get comfortable taking consecutive losses or taking losses and dealing with losing streaks. It's all part and parcel of being a trader, and every professional trader. It doesn't matter how many lines you have on your chart, it doesn't matter how many moving averages, how many indicators, how many order blocks you have, how much OCT rabbit hole you've gone down. You will have to take losses and you will have to deal with losses. Even OCT, the mastermind who invented trading Enigma machine, he even takes losses. That's how natural losses are. You've got to deal with them. In fact, he tends to take a lot of losses and has yet to win a Robins Cup, but I digress on my point of drawdown. Doesn't matter how much technical analysis you do, you always have to deal with drawdown in trading. So I hope this was educational and I hope this helps in a way. I haven't abandoned ship. Actually, this is a point that definitely needs discussing. I haven't abandoned ship with the guerrilla trading strategy either. People have been asking me if I only trade guerrilla trading, and people have asked me if I've abandoned guerrilla trading. Questions along these lines. I haven't given up on guerrilla trading strategy because, like I've mentioned, it's passed me multiple prop firm challenges and got me paid out. So it literally makes no sense for me to give up on the strategy and stop trading it. So I'm still regularly trading the guerrilla trading strategy at current, and it's no secret as well that I'm also learning the FalconFx mechanics and wrapping my head around how they use the higher time frame down to analyze the market. I understand that the guerrilla trading strategy is different to the FalconFx strategy. I did originally think, claim that they were the exact same. There are definitely differences between the two. Now that I've got to see the FalconFx strategy a bit more, there's definitely a difference between the two strategies. I can't just go in with the guerrilla trading mindset and use that in the FalconFx strategy. I'm really just going into it with a fresh mind. I think if I choose to trade the two strategies, I would be best to do it completely separately of each other. trade my guerrilla trading strategy on X prop firm, trade the FalconFx strategy on X prop firm, have separate personal accounts, and I don't think I'd be wise to try and hybrid the two and merge the two right now. So what I'm going to do is, like I say, I'm going to go into it with a fresh mindset and learn the FalconFx way of trading the best way that I can. And yeah, I'll keep you guys posted with that. We're keeping it 100 out here, keeping it raw, keeping it real. Trading isn't pretty, unfortunately. I know we all got painted a very pretty picture of trading through social media. Unfortunately, trading is pretty ugly. It's got an ugly side. When learning new strategies, you've just got to humble yourself. You've got to leave your ego at the door, and you've just got to and don't think that, like I say, that more analysis will equal less losses. I mean, to a degree it can, and it definitely does. But at the same time, you can't just overanalyze and take no losses. Like I say, it doesn't matter how much analysis you do, you have to be able to handle losses in trading. And yeah, I think that covers everything that I wanted to discuss. So I'm gonna thank you guys for watching, and yeah, let me know what you thought. Hopefully, again, educational, keeping it real, keeping it raw. Peace, love, and prosperity. I'm out.